Investment banking, and by that I mean mergers and acquisitions, is notorious for having high churn. Typically, people do it for 2 to 3 years, but I think with Gen Z, it's honestly looking more like 1 to 2 years, and then they leave to do other things. This happens with every new banking cohort, like clockwork. So many of these investment bankers who successfully secure the role, they fit the profile of an investment banker really well. I mean, they worked exceptionally hard to shape themselves into fitting the persona and convincing interviewers that they fit. So why is it that almost all of them leave? So like with most other videos on my channel, this video will take more of a philosophical, like deep meaning approach to this topic. That is to say, I will not be discussing the fact that exit opportunities have higher pay or more prestige, etc. This video is more about why the kind of person that goes into banking must leave, almost by necessity, almost in loyalty to who they are. They have to leave. So who is the investment banking persona? So to really understand why you have to leave banking, we have to discuss why exactly you went for it in the first place. Because in there, we can find the reason as to why it was never going to last. So going back to the beginning, investment banks hunt for the overachieving young people. On the surface, it seems like they recruit from top universities, but what they're actually recruiting is high-performing overachievers, the students who aced school, came out with not only perfect grades, but an impressive set of extracurricular achievements, and that obviously got them into these top universities. These are multifaceted young people with the ability, energy, and drive to learn academically and then exert another side of themselves to a high level in whatever extracurricular or sporting endeavor and they might be looking at. Like these are the sort of people that just have an itch to do a number of things and to do them well. They may even be addicted to just being above average. So these young people, they come to the top universities and they're still the same hungry people. These are the university students that are working late nights in the library because they're still, quote unquote, metaphorically taking over the world, whether that be winning competitions or running their societies to a high level, doing extra research. Like, honestly, in my time in investment banking, I never met anyone who just went to uni. Like, everyone had remarkable hobbies and interests and performed well in them. These are the kind of people that investment banks recruit. They weren't just dabblers in sport, they were champions. They weren't just interested in this niche part of economics or whatever field of study. They had their papers featured in top journals. They weren't just interested in AI. They planned a 500 attendee conference in which the CEO of OpenAI and government officials came to speak at. Like everything they did to a high level, and they did it all while juggling academics at their academically rigorous, prestigious university, and all while preparing for and enduring the arduous recruitment process for investment banking. So long story short, these are young people that go the extra mile. So yeah, that's all to give some context on the type of young people that investment banks hunt for. Like it's not just about the university. So how exactly does Goldman Sachs, JP Morgan, and Morgan Stanley allure these superstars? Well, I think there are a few dreams that they sell to them. So I think the first thing that they sell is this stepping stone narrative. So the absolute majority of people that go into banking, it's for the doors it can open. It opens doors for two reasons. Number one, the transferable skills that you gain on the job. And number two, the prestige. So with the skills, that is attention to detail, analytical skills, problem solving, storytelling, financial analysis, or whatever. These sort of skills that are being honed in banking are attractive to lots of other corporate jobs. And when I say hone, I really mean hone. I mean, there are lots of jobs that use these skills, of course, but the fact that investment bankers using these skills for 80 to 100 hours a week, it's believed that an ex-investment banking and analyst or associate will have learned more and have had those skills more ingrained in them than a 9-to-5er. The second thing is the prestige, and honestly, that's the most important thing. I think even for those who don't fully know what the job entails, because they know it's hard to get into and it's prestigious or whatever, future employers just trust the recruitment process of these banks that previously hired the banker. So basically, like if Goldman Sachs hired you for the top job, then yeah, I'll hire you too. So I think for those two reasons, M&A is seen as a brilliant stepping stone. So for the young person who is sort of on their path to take over the world or whatever, they understand that in their early years of their career, it would help them, if they stood on the highest initial stepping stone per se, to give them the best view of the next opportunities going forward. The second thing is difficulty. So in my experience and from observing other people who took the same path, by the time the young person is at university, I think they've almost come to associate struggle with being on the right path. So struggling in secondary school was certainly the right thing as it got them to the target universities. They look at their peers who maybe didn't work as hard or who coasted a little bit, and they saw where that took them. Yeah. And then going forward, struggling to juggle and excel in everything at university helped them to attract the interest of these prestigious banks. Even though they hear about these terrible rumors about the investment banking lifestyle, I think there is a part of many bankers deep down that thinks, well, surely good things will come from such hard work, because that's sort of a pattern that they've seen in their life to date. And, obviously these are also the people who have built a muscle in being able to endure such hard work. And the final reason as to why these banks are able to allure these sort of rock star young people is the pay and the prestige. Obviously, I won't spend too much time here. It's a bit basic. But I do think both these reasons play into their desire and maybe the habit of being above average. So it's like, I've always been ahead in the so-called ranking of each stage of life. And I now need to cheat that up, by getting a job that other people can't get. Okay, so that's a little bit on how the banks came to acquire these candidates in the first place, but how exactly do they go on to lose them? So in one line, it's because banking fails to deliver on the feeling of being better than people. This sounds harsh, but let me get into it. So my first point in this segment is that banking signals the end of the high achiever. So think about it. For many of us, working until midnight, 1 a.m. or whatever was what we did to get ahead in school and university. And this was exactly what was needed to become a top student, to write that extra essay that nobody asked for, to work on that startup or NGO on the side, and to write thought pieces on the state of the nations. But now, working until 1 a.m., 2 a.m., it's literally the bare minimum of the job. You do it to meet your job description. You do it to ensure that your associate wakes up in the morning with the work in their inbox. So the input is the same. The young people, they maintain their hard worker image and are just as sleep deprived, but the output is wildly different. And so, this is my conclusion. Investment banks deprive the high achiever of what they need to survive, which is an indicator that they are high achieving. Honestly, in other words, investment banks honestly destroy the high achiever and renders them into literally just an achiever, if that. Honestly, a lot of times in the job, it can feel like you're not even achieving. Junior bankers put in an immense amount of effort, which back in their studies and probably in any other job would make them a top performer. But here on the top floors of some American bank, that amount of effort renders them pretty mediocre, just about average. And I think that is quite a hard pill to swallow for this persona. And yes, of course, there is a small percentage of people who will insist on becoming a high achiever in this new context, in this new framework. They will, do what they've always done, grow, adapt, and rise to the challenge. And I have, honestly, an immense respect for these sort of bankers. But honestly, I think they become the kind of people that other investment bankers almost scoff at. They're the ones who pull even longer shifts, the sort of 4 to 6 a.m. sort of shift, or, spending more free time that they may have on the weekends to get better at their craft in order to become more efficient. Again, immensely, so much respect. And the thing is, I've heard this straight from the mouths of MDs at the investment bank I used to work at. And, they did it because they wanted to do whatever it took to be above average in this game as well. But this is honestly a small percentage of bankers. The majority of people leave. And I believe that it's because of this bigger problem. It's the stripping of the high achiever status. I was going to use the word robbery, but I don't think that would be accurate, because end of the day, they bankers willingly sacrifice these parts of ourselves that, made us stand out on the altar of a prestigious investment banking job. Which leads me smoothly into my next reason, which is that investment banking marks the end of the multifaceted. So after you do your investment banking hours, there are only a certain few who are able to put in extra time into other endeavors. Very few people would want to put that energy. And, obviously psychologically, exhausting yourself in the job would leave, number one, limited power, and number two, limited creativity to pursue almost anything else. So I think when you reflect on it, it's like previously I could put in the same amount of input and energy and I was a multifaceted rock star. Now I put in that same amount of energy and I am singular, lifeless, dull, mediocre investment banker. Is a shock to the system. And I remember facing this sort of personality crisis probably every month after my 6th month. I kept thinking I'm not doing enough. I kept feeling like there was more that I could be doing, literally as I hobbled into my bed at 2 a.m. And to any of my family or friends who I told about this, they were baffled because they're like, how could you do any more? they could see the effects of the job on me physically, mentally, and they're wondering like, how much more could you do? But mentally, to myself, there was this itch to do more, to use more of the different skills that I had to expand myself in a more meaningful way. And yeah, that itch was getting more and more intense. And I think after a while of feeling like this, I recognized that what I really meant was that I wasn't doing anything. That is, my autonomy was not being exhibited enough. Like, yes, there was a lot being done by me, the slides getting changed, the model changes, the calls, the research, etc. But I, as a person, I was not doing or creating enough. So for me, the solution that I got in the short term was just undergoing more sleep deprivation for the sake of exhibiting myself. And it was hard. Like I remember sort of my 6 month in M&A, I reached out to this tech startup newsletter that I was subscribed to, and I volunteered to help with one of their segments of the newsletter, like literally free labor. I was giving myself more work to do. I think there was this one weekend where I spent, I think the Sunday, working until midnight on this side project and staying probably 2 more hours than I intended to write this specific article on the African tech ecosystem. Logically, I was probably hurting myself. But the thing is, I woke up the next morning feeling more satisfied and actually less tired. And the thing is, I had to do it. I had to do it to keep the most precious part of myself alive, that curiosity, that wanting to do different things, the part of me that can choose to have interests and choose to expend energy in them and do well in them. And look, nurturing that interest and not letting investment banking, quote unquote, destroy that side of me ultimately led to me now working in tech VC. So, I guess it all worked out. Going back to my experience, I think maybe after the 4th month, I really got into listening to podcasts while I was working, while doing the more passive parts of the job. And I remember listening to this interview with Will Shu, if I'm pronounced that correctly, the founder of Deliveroo. And he talked about how he had the idea for Deliveroo and started working on it a little bit while being an investment banker at Morgan Stanley. And I found that inspirational, not just because of Deliveroo's success, which is obviously remarkable, but because Will Shu had maintained that thing within him. He obviously probably would be an entrepreneurial from quite a young age. He was able to maintain that fire in an environment that is so intense and just forces you to and just the one job that you're doing. So yeah, I found that really inspirational. I think at this point, it is worth saying that I do not encourage that everyone go down the same path of doing more work while working in what might be the corporate job with the longest hours. Like sleep is so, so, so important, and really important for especially your long-term health. And while, of course, your mental health, in my experience anyways, will be really grateful for you losing sleep to do what you love, ultimately your body does keep score. Actually, for more on this topic, I recommend watching my video on how investment banking changed my brain chemistry. Not now, after. But look, if you do have to do more work to feed that itch, to keep that thing inside alive, then look, be my guest, please do. So yeah, those are, in my opinion, the two big sort of deep reasons on why you have to leave investment banking. I think ultimately leaving is necessary to show integrity to who you are as a person. Of course, please let me know your thoughts in the comments at the end of this video. But just before I conclude, I think it would be wrong of me to not discuss how exactly the exit opportunities solve what banking maybe failed to solve. Well, I think most people will leave banking to enter similarly prestigious careers, but that have much more decent hours. A portion of these people will work those decent hours and then use the other hours for other aspects of their impressive lives, whether that is, training for a marathon, an Ironman, involvement in politics, advocacy. Like these are things that I know that my friends and networks have gone on to do. And I think another portion of people will, do the decent hours, they need to do the job. And then they will actually just expend more hours on the job to become the overachiever, to overperform in that role. And thus, on either of those two paths, equilibrium is reached in a way that it wasn't reached in investment banking. And yeah, honestly, it's a bit of a win-win because, they get to maintain the image of quote unquote doing better than the average person, which is why they probably wouldn't go into a normal sort of 9 to 5, all while still having the capacity and energy to try and be better than the people who are in their jobs. If that makes sense. This all sounds very weird, but it's like psychology, humans, it's not always the most purest of intents. Just as I'm about to conclude, as with all my videos, this is not really a critique of investment banking because I honestly do think more people should at least try to go into it. and things. I think what I've said is actually especially true post-COVID. And as Gen Z continues to enter the workforce, I think with Gen Z's life goals, leaving banking is literally inevitable. I think the average Gen Z, like for them, putting the extra effort into winning the banking game literally isn't worth it. I think they'd rather do 1 to 2 years at a good enough level to leave into a similarly prestigious job with better work-life balance and then having the time to overachieve and do other cool things on the side. I think if I ever had the chance to say something to an investment bank, HR, whatever, who wanted to retain their talent and not lose it to private capital investing roles, I think it may want to reconsider the hours. Like if there was a way to maybe hire 20% more people so that the hours could reduce a little bit for each person, I honestly think they could retain a lot more people. Not only because the working habits would be more sustainable or whatever, but because it actually gives this talent that they've recruited, it gives them capacity for them to maintain their essence as high performing people. And I think whether they choose to use that extra time to work harder on the job or use the extra time to indulge in their external interests, I think it would still do wonders for retention. And to the high achiever that's in banking, I'm on my knees begging you as I say this, allow the experience to refine and improve you, but do not let it crush your high achieving spirit. Keep it aflame in some way or another, or leave and find something a little more conducive, but protect that essence at all costs. Well, if you liked this video, you may also like these two here. Let me know your thoughts in the comments, and I will see you in the next one.